the last video that was shared. Did you go through it? You went through it?
Yeah.
So I think we can pick the income and expenditure account. I want to pick it from the income and expenditure account. That is on the NGO. That was August 2020. That was August 2021. August 2021. That should be August 2021. August 2021. The paper was sent to the group. The paper was sent to the group. We can start on that. Slowly by slowly as we also look for others to join. On the look as others to join. So back, so we were supposed to start on, there's an account called subscription account. We opened and we did the subscription account. Subscription account. What is the figure on the subscription account if you went through that handout? What are the figures in the subscription account?
141,600.
30?
134,200.
134,200. That is the figure. What about the figures in bar? We made a bar losses. So what are the losses in the bar?
25,700.
25,700. So we can move slowly with you. Today, your net is very, very good. And I'm happy about it. So we start on the income and expenditure account. So we say that the name of the NGO is called the AFIA. Let's call it AFIA. Youth Club. Statement of income and expenditure. Statement of income and expenditure. Then you say for the year. For the year ended. For the year ended. For the year ended. 30th June 2021. Tuko sawa masi. For the year ended 30th June 2021. Tuko sawa hapo. So we start with the subscription. We have subscription. The figure for the subscriptions ilikuwa ni ngapi? 134,200. Tuko pamoja?
Yes.
134,200. Then we also have other sources of income. That is competition entry. The other source was competition. Entries. What is the figure for the competition entries? Angalia your receipt and payment, the cash book. Cash book unit 29. We are the figure of 29. 600. Masi umeona?
Yes.
So for the bar, it was a loss. So bar, there was never an income. So then you say these are incomes. You say less expenditure. Less expenditure. So the first expenditure, we call it the bar losses. Bar losses ilikuwa ni 25,700. Tuko pamoja? 5,700.
Yes.
The next expense tulikuwa na angalia hapo on the rates. Rates ni ngapi?
20,000.
Kuna adjustment yote? There's not any adjustment. Si ndio masi? There's not any adjustment. Then we have loan repayment is not an expense. Are we together? So then there's another income hatujongeza Angalia additional information number 2. Interest receivable on long-term loan was a figure of, we have 2.2 million. So there's interest receivable, something that you miss. Interest receivable. So on the long-term deposit, they receive some money, and that is what we call interest receivable. A figure of 2.2, but we're rounding it to 1,000, so that should be 2,200 together. Massive.
Yes. Yes.
Yes, then we proceed to buy expenses we had sorted. Are we together? We had sorted them in the bar losses. Are we together? So we have competition tickets, competition tickets, cost yearly ngapi? 2,800. Tuko sawa masi hapo? 2,800. Tuko sawa masi?
Yes.
Then we have the next that we had. Angalia additional information number 3. Long-term loan is repaid annually. Angalia long-term loan was 96 altogether, but we say that it's paid annually. The long-term loan is repaid annually, installment of 30 excluding interest. The interest for the year ended 30th June, interest was 9,200. So that interest on loan, interest on long-term loan, interest on the long-term loan, that was 9.2 million. So that is 9,200, 9,200. There's a working. What was the deposition? There's a working that you did for the deposition. Working for deposition. So we have equipment. Mas, what was the deposition for equipment?
5,900.
So we can just confirm that deposition. We confirm it again. Are we together? So we're being told that deposition is on the straight line. So the first year, the first equipment that was there, Masi tuko na equipment ilikuwa ni 46. Tulikuwa tumepatiwa cost minus, we were told cost minus accumulated depreciation, which is 25 million. The net book value is 20. So in this case, the cost we were able to get is by saying it should be 25 million plus 20 million. So meaning that the cost was how much? The cost was 45. Tuko pamoja?
Yes.
So then we're being told that there's an equipment that has been purchased. Equipment is not an expense, but we add it all together. Addition of that equipment that was 14 altogether. Meaning total equipment should have been 15. We have it as 59 million. But remember the figures are rounded off to 1,000. That is 59. That should be 59,000 altogether. 59,000. So we've been told that depreciation is calculated on a straight line. To imply that depreciation is calculated on, depreciation is basically calculated on cost. So cost times the rate of depreciation, cost times the rate of depreciation, which in this case is 10%. 10%. So that is 59. Confirmed. That is 59. So Masi, there's an additional information down there on depreciation. It is the policy of the club to charge a full year depreciation on asset in the year of purchase and none in the year of disposal. So even this asset, the reason why I've added it, we're saying that regardless of when you bought the asset, you'll still provide for a whole year depreciation, together. You still provide for what you call a whole year depreciation, So that is the depreciation. So we have depreciation of equipment, depreciation for equipment, that is 59. And lastly, we have the depreciation for depreciation. The next asset was furniture and fitting, F and F, furniture and fittings. So we can also work it out and just confirm those are very sensitive. So a bit of that depreciation is calculated on a reducing balance. So if you're told reducing balance basically, reducing balance means we calculate it on net book value together. So Mercy, if you look at that question, we had furniture 80. So minus accumulated net book value is 46. So the net value was 46. If you less depreciation, the net book value then is 46. So 46, which is the net value times the rate, which is 15%. 15%. What is the rate of that?
69. 6900.
That is 16. You're saying 69. So that is 69. Karibu Joseph. So that is 69. Is there any item that we've not on expense that we've not list? Let's look at any items on asset that we've not list. I don't think so. Less kila kitu. Loan repayment is not an expense, which cannot. So that we have less everything together. So what do we have? Look at those incomes, then you less minus expense. Do you have a deficit or do you have a surplus? If you add that, do we have an asset? Do you have a surplus or a deficit when you have that? Do you have a surplus or do you have a deficit? So Joseph Karibu. So in this case, we have 134.
Yeah, surplus.
Plus 29, 600. Let me assist you. Plus 22, 00. Then minus 25, 700. Minus 4,800. Minus 9,200. Minus 5,900. Minus 6,900. So we have 77,500. And this is surplus. Not profit, but surplus. So the incomes are basically more than the expense. And do we have 77,500? Tuko na 77,500. Mercy tuko pamoja. Mercy and Joseph tuko pamoja. Copy that, then I have that. You're saying?
77,500.
Yes, Asante, that's what I've noted. I'm also doing it. Joseph Karibu. So have you copied that? If you've copied that, then I want us to proceed to the next. Is that copied? Before we go to the statement of financial position, do you have the capital? Capital at the beginning. Do you have capital in that question? We don't have capital in that question. Together. Okay, so in NGO, we call it accumulated fund at start together. So I want to give you a format of accumulated fund at start. So can I wrap this? Can I wrap? Can I wrap?
Please, a minute.
Okay. Joseph, can I wrap that?
No, a minute.
Okay. 2 minutes, then you're done. You'll be done. Two minutes and you'll be done. Is that done? Joseph,
Yes.
can I wrap?
Yes, yes. Yes.
I was waiting for you, Joseph. So could you just communicate so that I can wrap it?
Yes, please go ahead, please.
Okay. So I can wrap this. We don't have capital at start, and that is the accumulated fund at start. Capital at start, and that is what we call accumulated fund at start. So accumulated fund at start, and that is the capital, what we call accumulated fund at the start. Accumulated fund at the start. Accumulated fund at start. Accumulated fund at start. So the capital, we call it what we call accumulated. Accumulated. Latent fund. That is what this at start. So capital at start, we basically say that the formula is assets at start minus liabilities minus liabilities minus liabilities at start. So assets at start minus liability at start. So remember, bookkeeping equation, we normally say asset is equals to A is equals to C plus L. So if I want to minus so can I have a simple format on this? A simple format on this. So we know bank. Let's say bank. But remember at start, cash at start, opening stock. We know that is opening stock. That is asset at start. Then you can have subscription in arrears, brought down, that is at start, you add that. Subscription in arrears at start, brought down. Then we have PPE, property at start. At start, we have it, then we say less liabilities. Liabilities at start. Liabilities at start. So liabilities at start could be loans, long-term loans at start. Long-term loans at start. We have the figure you less. The next one we can talk about subscription in advance brought down, that is at start, you less that. Then accruals, you can talk about accruals brought down, that is at start, you less that. Accrual at start, you less that altogether. Then you can also talk about liabilities. You can also talk about creditors brought down at start. So when you less that, we get accumulated fund at start. Accumulated fund at start, so capital at start. So capital at start. So that is how we get capital at start. Copy that, then we do that question. We get accumulated fund at start. Copy that. Copy that. Once you're done, you let Mwalimu know. You copy that, then you let Mwalimu know. Have you copied that? Is that done? So that capital at start, ukiangalia balances brought down from the first statement, hatuna capital. So that is what we are doing. That is what I want us to do. That is what I want us to do. That is what basically I want us to do. That is what basically I want us to do. That is what basically I want us to do. So if you're done, you let Mwalimu know so that we get that capital at start, because we don't have capital at start in this particular question. We don't have the capital at start.
Done.
You're done. So I can do it just besides this. So angalia entries za kwanza. If you look at this entry, this provides assets at the start. Tuko pamoja, this provides assets at the start. So at the beginning, we had the first asset that we have land. Land ilikuwa ni ngapi? Land ni 90. Are we together? Land is 90. Then we have these assets at start. We have inventory. Unaongeza inventory. Inventory at the beginning was 18,400. Then we have bank balance. Balance was 4,500. Munaona hizo figures. Hizo figures tunaona. Nega assets at the start. And it is this entry. The following balances were extracted from the books of Afya for the year ended 30th June 2020. So tukianza 1st July 2020 running to 30th June 2021, those are the balance brought down together. Tuko sawa?
Yes, yes.
So then subscription in arrears, that's an asset subscription. Those are like data subscription in arrears. When you wajalipa the club, those are subscription in arrears, that is a figure of 5,000. A figure of 5,000. A figure of 5,000, then we have equipment. We have equipment. The net book value as of that January, we have 20. That is the net value. We have furniture and fittings, furniture and F&F, that is 46. Those are, what is the total? Is there any asset that tumeacha? Tuna assets. So we have total assets. So what you get for me the total assets? Total assets. What is the total assets at the beginning? Figure for the total assets at the beginning. Add that for me.
$183, 900.
183,
900.
900. Then you less liabilities at start. You less the liabilities at start. So the first liability starts to connect liabilities there was something on long-term bank deposits. So we had long-term bank deposits. Long-term bank deposits. Long-term bank deposits. That is 12. Sorry. Change this. What is that figure? Long-term bank deposits. What is that figure? You just add that 12,000.
$195.
One?
900.
195.
900.
900. So liability at start, kuja hapo. We have long-term loan at the beginning. Long-term loan. Long-term loan, that is 96. Less that. We also have bar creditors. What you call the bar creditors at the beginning. Creditors. Here ilikuwa ni 16,800. 16,800. Then we have subscription in advance. Subscription in advance. Brought down. Subscription in advance brought down. That is 1,600. Then we have accrued bar wages. So what you call the accrued bar wages. So that is at the beginning. So what is accumulated fund at start? Accumulated fund at start. At start, or the capital at start. Which figure are we getting?
$116,700.
What? What is the figure, Mercy?
116,700.
I don't think so. If you have 195, unanidanganya. Kwanza less 96 imerudi less than. So let me confirm what the figure that you're giving me first of all, Mercy. Let me confirm that figure that you're giving me. Here, Jim. Kama ni correct. Plus 12,000. 5,000 plus. Let me just confirm kila kitu yako is when I give you a clean bill of health. So that's 195. So to less 96, this one should be less than 100,000. So if less 96, that is 99 minus 16,800.
Sorry, what I said was the total liabilities. It's
Yes, so then less.
116,700.
That gives me accumulated fund at start to be 79,200. So that is the capital at start. Here your capital at start. Copy that. And I hope it's neat. See your kazi iko neat. It's very neat there. You just copy the format. Accumulated fund at start. So that is 79,200. Copy that, then you let me know. Copy that. Once you copy that, we'll do the last part of it. Once you're done, uambie mwalimu umemaliza. Copy, then you let me know. Copy so that I can go to the statement of financial position. Joseph and Mercy, has it been copied? If that has been copied, mwambie mwalimu iko sawa. Iko sawa hiyo. I want us to respond if you're done so that I can rather do the last part.
Excellent.
Iko sawa. So I want us to proceed to the statement of financial position. This figure, when I ask, you give me 79,200. When I ask about it, you give me that. So we do the statement of financial position. What is the statement of financial position as of 30th June 2021? So we can rather do that. So statement of financial position is basically the balance sheet. So we can do that. And pick the next question on the same. That will be better. Instead of doing one, we'll pick on one then else. So we say statement of financial position. We say Afia Club. That should be Afia Club. That is Afia Club. And you say statement of financial position. And you say as a statement of financial position. So hapo Juni Afya Club, statement of financial position as at 30th, we say that as at 30th, 06/2021. Together, hapo tuko sawa. We respond with the yes. So we start with the non-current assets. The non-current assets. So the non-current assets. So we have land. The first non-current asset is land. What is the value of the land? Munipatie from your paper. What is the value of the land? The value of the land. What is the value of the land? Land ni gapi? Land should be 90. Say land is 90. So land is 90. Tuko sawa hapo on land. Mbonyeze yes kama tuko sawa. Kama tuko sawa, useme yes. I want us to respond to the yes kama tuko sawa.
Yes.
Asante. So land has not lost value, neither has it depreciated. So the cost is that. So then I go to equipment. Remember, equipment tulikuwa na ya kwanza ilikuwa ni 46 plus we had 46 plus the one that we bought, which is 14, 45, that should be 59. Then we less accumulated depreciation at start, that is 29, 25. Then less depreciation for the year 5,900. So what is the net book value? Remember, this is given based on net book value. So we've gone back to the cost. Here, kwanza ilikuwa 45 plus 14, that is 59, minus accumulated depreciation, which will be 25 million. Then we less 5,900. What is the net book value for the equipment? Mercy gave me the net book value for the equipment. Minus 25. Minus 5,900. Are we having 28,100? 28,100. So we have furniture and fittings. So furniture and fittings in this equation, furniture and fittings in this question. We know that initial cost was 80, so we have 80 million. So minus 34, because accumulated deposition was 34, and deposition for the year was 6,900. So what is the net book value? What is the net book value? Or you can have 46 minus 6,900. So we have 80 minus 34, then minus 6,900. So that should be 39. Are we having 39,100? Here the 39,100. Is that 39,100? Are we having that? Tuko sawa? My people, are we together? Watu wamenyamaza kwa nini na tunafanya swali? Mercy, Joseph, tuko pamoja?
Yeah.
So we have investment, long term. That is investment, long term. Investment. So we have investment was, we had 12,000. So that is long-term deposits, what we call long-term deposit, that was 12. But then we told transfer to long-term deposits. So transfer, meaning there was a transfer happen during the year. So long-term deposits was 32. Mercy, tuko sawa? Tuko sawa? Joseph, tuko sawa?
Yes.
Mercy ananiangushanga. She runs away when we need her. So what is the long-term non-current assets? So if you have that, what should be the you have 189, 200. Tuko sawa, 189, 200. Tuko sawa.
Yeah.
So bet karibu, then I go to current, what you call the current assets. Current assets. So on current assets, the first one that we have is inventory. So that's inventory at the end. That is a bar inventory. So inventory, that should be a figure of 19,800. 19,800. Then balance, bank balance, bank balance, current down. So just a bank balance is 4,500. But current down, angalia receipted payment. So balance current down for the bank should be 29,100. So we have 29,100 for the bank balance current down. 29,100. Sawa. Are we together?
Yes.
Joseph, umeona? Betty, umeona hiyo? Mercy pia ameniangusha. Mercy, are you there? Guys, I need you to be there with me. Asante. So, some of the assets that are there. So we look at assets, subscription in arrears at the end.
You back.
Unasema?
I'll just take you back. I know.
You just do?
I'll take you back a little bit.
Yes, take me.
Hii investment tunachukua ya wapi?
Angalia. Investment. Angalia investment at the start. Long-term bank deposits. So not 12,000 up. Are you seeing long-term deposits? Those are the investments. Unaona 12,000 beta?
Yes, long-term bank deposit ndio ni investment.
Yeah, the investment. So plus long-term, when you say long-term, is not a current asset altogether. When you say long-term in deposit, those are investment. Then ukikuja kwa receipt and payment, tunaambia pale that transfer to long-term deposit account. So there were transfer that were made. So there's also long-term deposit account that was added, that should be 32. Tuko pamoja?
Okay.
Yes, so subscription in arrears at the end is also an asset. Another asset that we have for this. Do you have any asset that have not added? We don't have. So current asset, what are the current assets? Add for me that.
$900.
52,900.
Gun, what is the figure?
52,900.
52,900.
Guys are afraid. Let me assist you 19,800 plus 29,100 plus 4,000. So that is 52,900. So total assets, what is the total assets? Give me the total assets. Plus 189.
42,100.
Nini?
52,100.
Masi. 242,100. Is that okay? 242,100.
Hiyo ya mwisho ni gani?
Subscription in arrears at the end.
Okay. Why is it an asset and it's an arrear?
In a
Why do we?
kwanza. Sasa mkinyamaza, and your guys who are with me.
Mwalimu, a question.
Finance. You say?
I'm asking a simple question.
Yes, ask.
Why are we putting subscription in arrears as an asset?
So subscription in arrears are like debts altogether, are like debtors. For example, one of the major source, Angalia, one of the major source of funding for the NGO is member subscription. Subscription. Tunaelewana beti? One of the major sources of funding for the NGO, if you read the notes, is subscription altogether. So these are like members' contribution altogether. So members who are behind, who have not paid the subscription, those are like debtors. So debtors, a subscription in arrears are like debtors altogether. So debtors at the end are basically assets to what? Assets to the NGO. So
Okay.
Then subscription in advance, those are like
Accruals.
So that is it's in the group Elizabeth. So that is it's in a August 2021, August 2021 question. That should be August 2021 question 4. You have been so lost. I hope you. So we start with the capital at start, which you call accumulated. Accumulated fund at start. Accumulated fund at start. What was the figure? Mercy na Joseph. Tulipata ngapi wakati tunafanya accumulated fund at start? What is the figure?
79,200.
79,200. Then you have the next, which is surplus.
Accumulated what? Unaandika ndogo leo mwalimu.
Accumulated fund at start.
Okay.
Accumulated fund at start. That is capital at the beginning. Remember, we were not provided for capital. So there's a summary to put up your capital at start. This is capital at start. Then surplus, we have the surplus from income and expenditure. Surplus from income and expenditure. What is that surplus from income and expenditure?
27,500.
77?
500.
77,500. Are we together? What is that total capital if you add it?
Hiyo tumetoa wapi? Eh?
So that should be that. Then we have
Hiyo
non-current
surplus
liability.
tumetoa wapi jamani?
Our core class, Nani Betty, there is income and expenditure account. That is where we got surplus from income and expenditure account. That was Betty. You were not in class.
Which class?
You are not in class today. We've just done it today. Income and expenditure account.
What? Okay.
Yes.
Okay, it started earlier.
Yes.
Mm.
So we
Mercy,
have
Mercy, please share the Nini notes on income and
liability.
expenditure.
Okay.
Thank you.
The non-current liabilities. What are the non-current liabilities that we have? The non-current liabilities. What are the non-current liabilities? The non-current liabilities. Non-current liabilities. Long-term liability.
Loan.
So what is the long-term liability?
Long-term loan.
So what is the value of the long-term loan? What is the value of the long-term loan? So at the beginning, we had a long-term loan of 96. Are we together? The figure was 96. The figure was 96. Then we're being told that there's some amount of loan that has been paid. There's some amount of loan that has been paid. There is some amount of loan that has been paid. So we had a loan of 96, so together. But we say it, we say that there's a figure of loan repayment 39, you know. So there's a loan, long-term loan. Loan is a figure of 96. How much was paid? So what is the long-term loan that is remaining?
57.
Say?
57.
Yes.
The border haionekani hapa.
Current, let me write it here. Mercy Ameni anapotea.
57.
It can't be 57. It can't be 96 minus 30. It can't be 30.
57.
It can't be 57. Mercy, you're lying to me. 96 minus 30.
39. Loan repayment is 39. 200.
9,200 is interest. 9,200 is interest. Tulitoa interest on loan kwa income
Oh,
and expenditure.
Sorry.
Ukiangalia surplus, ukiangalia income and expenditure, did we deduct interest on loan?
And current liabilities, I can't see the board.
Ni nani huyu anaongea? Si unasema jina kwanza. So we have loan, long-term loan. So we had 96 at the beginning. And so we paid 30 towards that.
That should be 66, Ama.
Yes, that should be 66. Then I'm asking Mercy a very fundamental question. Tulitoa interest on loan, Mercy.
Little interesting.
To your
As an expenditure, as an expense.
income and expenditure. Did you remove interest on loan?
No. With less.
So tulitoa interest on loan up. Interest on loan tulitoa to me a picture. I want to see what you did. Just send the photo.
Okay.
Who are under Mercy? You are the guy, you're the person who is yeah, that was deducted. And so we go to next is current liabilities. Current liabilities. Current
I have a
liabilities.
question.
Nini?
Niko na swali. From the receipts
Nani?
and
At
receipts and payment account, we have loan repayment of 39,200.
so 39 30 tumetoa hapa, 9,000 tumetumia interest on loan is an expense. Tumetumia kwa income and expenditure account. Siko hapo, it's there. So the breakdown of 39, look up Basi. The breakdown of 39, 30 goes to the loan account to reduce the loan. 9,000 is an expense. 9,200 is an expense. Sawa sawa Basi.
Okay.
Sumelewa.
Yeah.
So then we proceed to the next. We have the next, which is the next is current liabilities on subscription in advance at the end. Subscription in advance. Those are liability carried down. That should be a figure of 2,400. Then we have bar wages due. Bar wages that is owing at the end that is 32. Bar wages, that is owing at the end, that is 32. That should be 32. That should be 32. That should be 32. So hard for me that. Is there any liability hatujaongeza hapo? Is there any liability hatujaongeza hapo? So give me that total of that.
We're doing question 4.
Elizabeth, shida nini?
I'm seeing, are we doing question 4?
Yes, we're doing question 4 on the NQ. And please don't miss class, Elizabeth. There's
No,
always
I had
challenges in
some-
this class.
I had some internet issues.
I understand, but you've missed a lot.
Okay.
So you see me worried about you. When you miss a lot, even if you have internet issues, maybe one, but then you have consistently missed.
Mwalimu, that is subscriptions what before bar wages?
Those are subscription in advance at the end, carried out. So angalia your list. Then you also have back creditors. There's one that we've not added. Back creditors at the end. What you call the back creditors at the end. Back creditors at the end, carried down. So the back creditors at the end is a figure of 16,000. 16,000. So those are current liabilities.
Mm-hmm.
Those current liabilities. So what is the total current liability? 2,432 and that. Don't miss class. I have about, because after this I'm doing manufacturing, then I'm doing cash flow, then nafanya na ratios. The other things we just summarize in one class. Those are the big areas. So what is the current liability, total current liability? Current liabilities.
21,600. 21,600. 21,600.
20?
21,600.
21,600. So add capital plus long-term liability, 21,600. You say this 21,600. So the add for me, capital, that's 156 plus capital plus liability. Add for me those figures.
7,600.
Total capital plus liabilities.
It's 240. Huh?
Hii figure long term loan ni ngapi? 66,800 or 66,000?
66,000.
Thank you.
It is coming to
57.
244,300. There's a misbalance.
Ngoja kidogo. Hiyo si shida, hiyo we'll get what we need. So there's a figure of, hapo tunapata figure ya
244,300.
244,300. So what is the
Yes.
difference? What is the difference with that?
2,200.
Hmm? 2,300.
$20?
2,300.
See the 244. Angalia hapa. Sini 244,300.
Yes.
So minus this, what is the figure? Not 300. This is 100. So that there's a figure of 20.
Oh, 2,200.
22.
200. So 200 into 200. That is what you need to look at.
Yes.
2,200.
Excuse me, is it bank creditors carry down? The difference there, it's a negative value, or I don't follow. There 16,000 minus 21,600.
Which one?
Under current
16,000?
liabilities. Under current liabilities,
Mm.
where you've written 16,000 minus 21,600. So you're supposed to subtract the two, or
You're
what's
saying?
going on there?
What are you saying? Just repeat it again. Somebody say?
Minimum
It's
part.
Elizabeth. Under current liabilities, the last
Yes,
part
current
there,
liability.
16,000 minus 21,600.
Why 16,000 current liability?
Bank creditors carry down.
Mwalimu, Elizabeth, kwa current liabilities tulikuwa na vitu vitatu.
Elizabeth.
Yes. Yes.
20 minus 16,000.
Hmm?
Why are you getting 29,100 minus 16,000?
No, like the last point there, where you've written 21,600 there.
Wapi?
Yes,
Mwalimu, give me a
there.
second, I help and nimempata.
What is happening on that? What is the issue, Elizabeth?
Give me a second, Mwalimu. Let me show her. I have understood Elizabeth.
Yes.
Elizabeth, kwa current liabilities tulikuwa na aspects tatu. Number one was subscription in advance, which was
Subscription in advance
2,400.
carried down.
And then
Wow,
tukapata
carried
wages
down.
is 3,200. Alafu tukapata bank creditors ni 16,000. So tumeongeza 2,400 plus 32 plus 16,000, zote zikaleta 21,600.
Oh, thank you.
Karibu.
2,200.
Bar wages, accrued, bar wages, carried down. So we are in agreement. Then what am I looking for? I'm looking for a figure. We have
2,200.
what they took it over 244, 300, minus 240. 100. So I'm looking for a figure of 2,200. That is what I'm looking for. So where is that figure of 2,200?
Interest receivable.
So, angalia, kwanza, we have interest receivable on long-term deposit amounted to this. So we were not told whether it's received or together. Are we together? So
Yes.
that's we add it all together. Interest receivable all together. So that is an asset all together because we were not told all together. Sawa.
Thank you, Marty. Okay.
Angalia, the figure of 2,200 is that on interest receivable. Tunaelewana?
Yes.
So that is where that's an asset because it's an asset because we're not told whether they had received, but that is interest receivable together. So it's also an asset. So interest receivable, interest receivable, a figure of 2022. So what is the total upper? When you add that, ngapi? Change that. Hiyo ni ngapi, Joseph? Hiyo ni ngapi?
244,300.
You people, munaniangusha. Wananiangusha sana.
55,100.
Give me those figures.
55,100.
55,100.
100.
55,100. So that is 244,300. So back to Elizabeth. There's something you explained to Elizabeth, but then the breakdown. Was she talking about the breakdown of 21,600?
Yes.
That was what she was talking about. So when
Yes.
Yeah, I was thinking it's
the
a
breakdown-
minus there.
No, there's no minus there. Those are liabilities. Those are owings or liabilities. Tuko pamoja be Elizabeth. Those are liability, current liability, short-term liabilities. So these are subscription in advance at the end altogether. In advance at the end. Subscription in advance at the end. So members have paid more. Members have paid more to the NGO, which is AFIA. So that's a liability to the what? To the NGO, which is called AFIA. Accrued. Accrued, the next was accrued bar wages. Accrued bar wages. So due is accrual. So at the end of the day, we still owe. Are we together? We still owe suppliers. So that's the liability. Then back creditors. Tunaambiwa at the end, there's still a back creditors of 16,000. We still owe back creditors 16,000. So that's the liability at the end. That is on 30th June 2021. So this gives us a summation of current liability. And I hope you understood this. At the beginning, ukiangalia hii swali, at the beginning on this assets, kulikuwa na long-term loan of a figure of 96. But on the course of the year, we paid 30,000. So that's why I was raising 30, we paid 30 million. So the remaining loan was 66 altogether. On this, it tulifanya working yake kwa income and expenditure. If figure ni asset capital at the beginning, tunaita accumulated fund at start. And Mercy and Joseph were there. Then on this interest receivable, the reason why we've added it as an asset, we've been told that interest receivable, meaning it had not been received. Are we together? The bank still owes altogether. The bank still owes. Accrued income, we're going to add it as income on the income statement, but then we are going to use it as current assets in what? In the statement of financial position. So I have a total of current asset, that figure. So if you have that, then we're able to balance that. Nani ana swali before I do another question? Nani ana swali yoyote? Kuna mtu ana swali? Kuna mtu ana swali? I'm asking a question. Is there anybody with a question? Before we do one, then I introduce manufacturing. One more question, then I introduce manufacturing. Betu una swali?
Niko sawa mwalimu.
Joseph una swali?
I'm okay.
My good friend Elizabeth, una swali?
No, I don't have a question.
Then my pleas to you, Elizabeth, I don't want you to miss any class of mine up to the end on what we're going to do. I have got 2 classes, then I have 2 days, 2 classes of revision. 2 classes of revision talking about the exam. Miss. Then Mercy, are you sorted?
Yeah.
Okay, we can have a break of 10 minutes. Then when I come, I start on the next question on NGO. I hope this question now we will all be there and participate. Is that okay?
Super.
Yes.
Asante. So the 5-10 minutes that you have, refresh, angalia data yenye uko nayo, so that when I come to the next question, kama hizo formats, tumia watu, Mercy, tumia watu how to get a subscription account, tumia watu how to get accumulated fund at start. Are we together? The format for the subscription account, tell them we're together, show them. So send
My
those
handwriting
items.
is not that good.
You
On
say
Thursday, at Tumeza from Thursday.
you do
My
what?
handwriting is not that good.
Share. Don't be afraid. Share what you have. Don't be afraid of them. They're also not better than you. We are also not better than you. We are just trying. So share what you have. Sawa. November 2019, question 4. Tafadhali, November 2019, question 4. Have you absorbed that? November 2019, question 4. November 2019, question 4.
November 2019, question 4.
Yes. November
Mwalimu,
2019.
you will see it.
Let me send it. Can I send it?
Please do. Thank you, please do.
Remember, manufacturing is the next thing that we're doing, and I'm requesting that. I don't know whether you have a class on Tuesday. Do you have a class on Tuesday? Do you have a class on Tuesday? Can I be given that class on Tuesday? Can you start that? November 2019. November 2019. Question 4. On NGO. Non-profit. November. Together there. If you're together, we respond with a yes. Tafadhali, 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 watu wangu. Sitaki tuchelewe, tafadhali. So can I start on that question? So can I start? You respond, tafadhali, tafadhali. That is all that I always ask you on a daily basis.
Give them a few minutes, seemingly not everybody's back.
You do what?
Give them a few minutes, seemingly not everyone is back.
Well, how do we delay? We delay a lot. I don't want us to drag. See, if I had 1 hour, 15 minutes, that would be very interesting. But now my time has been eaten without time. And I want to sit down with these questions. You basically sit down, normally sit down. After we come from class, you practice. So can I read that? I think I start. If you're there, I can start with you.
Okay.
Yes. Others could just be quiet and they know we're doing it. So he said the following information relates to Friday Sana Social Club. On a bank at the beginning, a figure 6,000. Then again, these are the sources of income. One source of income is subscription received, members contribution, that is what we call the subscription as the first source. The next source to canal of income is canteen sales. These guys also had canteens where they were selling. Then they had donation. People were donating to this social club. Then we have dance ticket sales. They were also selling dance ticket. Another source of income was investment income. So investment income, then interest income. So those are the sources of income. Then during the year, they made the following payments together. So canteen purchase, that was a payment that was made. Electricity and water was also made, a figure of 4,050,000. Sports equipment was also bought, a figure of 30 million. Canteen wages, there was a figure of 4,300. Canteen expenses, we also had a figure of 2,250,000. There was secretary allowance. This social club also had a secretary allowance of 67,500,000. There's training fee that was 22,500,000. There was groundsman wages, a figure of 18 million. There was dance expenses, a figure of 13,500,000. There was traveling expenses, a figure of 18,900,000. There was sports pavilion expenses. A figure of 8,100,000. So at the end of the year, a bank had a figure of 50 million, and cash, we had a cash of 42,450,000. Is that explanation at all? Kama tuko sawa na hizo, tumeelewa what you're saying? Receipt hapo tells us incomes of this club. Expenses, these were, where the money was going out during the year. Tuko pamoja.
Yes.
So we've been told that the following balances were available as of 30th June. Sorry, as of 30th June. So Clubhouse ilikuwa ni ngapi at the beginning? Clubhouse ilikuwa ni 153. Now at the end ilikuwa ni 153. So that asset ilibaki to the same. Tuko pamoja?
Yes.
Are we together? Clubhouse
Yes.
is that's a building. So it was at the beginning it was 153. At the end it was also 153. Sawa. Then sports equipment. Tunaambiwa at the beginning, if you're to analyze, we have a sports equipment. Together mwaka, it was a figure of 36 altogether. So there's a question mark. What is the value at the end? Elizabeth already pattern. Elizabeth.
Yes.
Tafadhali, msinyamaze. This is a calculation that you need to. So we're being asked what is the value. Angalia hapo payments. So meaning at the end, tulikuwa na 66. Tumeona hiyo. Are we seeing the 30 in the expenses on the payments account? Unaona hiyo, Joseph?
Yeah.
So at the end, there's a question mark because we bought another 30. So then we're being told that furniture and fittings. At the beginning, it was 27. At the end, it was 27. So meaning we did not buy any furniture and fitting. Then we have canteen inventory. So canteen inventory ilikuwa na opening stock yake ilikuwa 9,000. Closing stock was 11,250. Then we have the next. We had subscription in arrears at the beginning. That was 10,800. At the end was 12,600. Then canteen subscription in advance at the beginning was 8,100. At the end was 2,700. Are we able to see those?
Yes.
Nobody is participating. So then we have what we call outstanding electricity and water. So electricity and water outstanding at the beginning was 1,350 at the end is 3,300. Tunaona hizo figures.
Yes.
Then I have accumulated depreciation. So at the beginning, accumulated depreciation for the sports equipment had been 12,600. Furniture and fitting was 8,100. So at the end, wanatuambia, they don't know because we don't know, we have not calculated depreciation for the year. Then we have investment. At the beginning, we had an investment of 36. At the beginning, we had an investment of 36. At the end, the investment is still the same. So there was no investment that was added. The subscription received by the club. Subscription received by the club. Subscription received by the club in the year. So those subscription received. Subscription received. So tulikuwa na 2018. We received 2018. 2019, the figure was 114,300. And then for 2020, that was so what is the total if you had that? Is it giving us 144? Is it giving us 144? Is it giving us 144? Is it giving us 144 if you add it? Kwani mmechoka? Are you guys tired?
No.
You're tired?
No.
Nani amechoka? So that figure, you're saying?
144.
Wait. I have a problem. Wait. Guys, if you're sitting somewhere, just rise. Utembee kidogo alafu kaa chini. So when you add this, are you getting a figure of 144?
Yes.
So that is the breakdown of subscription received on the receipt side. Are you seeing receipt side? It's 144. So you're being given a breakdown. So the one that was received for 2019 was received for 2019 was this altogether. For 2020 was that altogether. So giving us total that was received, that was a figure of 144. Then we say the club decided to write off subscription in arrears. The club decided to write subscription in arrears amounting to 9,000. Those are subscription written off. We are adjusting in subscription account. Then the next, we say that canteen sales amounting to 4,500 in cash were omitted from the record. So we adjust, we can have our working man, and we call it canteen sales. Canteen sales. So that canteen sales, we know that we have a figure of 4,500, but we have 4,500 omitted. So we have 4,500 omitted sales. So what is that total? 4,500 plus 4,500. What do you have? So total, we adjust that sales. So in that 4,500, there was no 4,500 omitted. So what is that figure, Elizabeth? During the calculation,
45,000. 45,000.
Ni nani anaongea?
Elizabeth.
I need to find a way of motivating this class. Wamechoka sana. Then you're being told that depreciation was charged. Depreciation was charged on a straight line. depreciation was charged on a straight line. So I have working two, we call it depreciation. So I start with sports equipment. Sports equipment. The cost is a figure of 66. So I'll have 66 times the rate of depreciation, which is on a straight line, is 20%. So what is that depreciation? What is the depreciation for that?
$13,200.
13,200. Msichoke. Good things happen to watu wanakazana. The body may feel tired, but as long as the mind is very strong, nothing happens to a person who's willing to try and to continue. So then we get to furniture and fittings. Furniture and fitting. And I hope you remember at the end, kulikuwa na 36 plus 30 that was bought. That's where we get the cost of 66. What is the value of furniture and fittings? Nataka that good student anipatie your value of furniture and fittings.
27.
How much?
27,000.
27,000. What is the rate of depreciation on a straight line? Cost times the rate. The rate is nothing? 10%. So what is that figure?
2,700.
2,700. So ngangana. So until you get, don't be tired. Get tired when you get what you need. But don't get tired until you only relax when you have gotten what you need. And our focus is basically to pass exam. Not until we pass exam, we will be satisfied. So then we've been told additional information. Number 6, during the year ended 30th June 2019, sports equipment. So hapa na rap. Angalia. Tuko pamoja. There's adjustment that needs to be done. So that figure is not right. Tunaelewana? During the year ended 30th June, sport equipment was disposed for 9,000 on credit. On credit. The equipment had a cost of 18,000 and had been used for 2 years. So hii tunarudia. So we say sports equipment. Sports equipment. So we say total cost is 66. Tuko pamoja.
Yes.
So we are saying during the year ended 30th June 2019, sports equipment was disposed for 9,000 on credit. The equipment at the cost. So we less disposal, less at cost, we less this is disposal. So what is the cost remaining?
$48,000.
40?
48,000.
48,000. So you can get depreciation. That should be 48,000 times 20%.
$9,600.
9,600. So look at this asset together. Look at this asset. Angalia, by the time we were disposing it, it had been there for how many years? It had been used for 2 years altogether. The cost was, so depreciation before disposal. Depreciation before disposal. It had been there for 2 years. Remember, it was 18,000 times the rate, which is 20%. What is that value? What is that value of that?
$3,600.
Ngapi? 20% of 18,000.
3,600.
Kuna mtu ananidanganya hapa na nimekataa. 2,800 aje?
3,600.
That's 600. So that is the first year. So for 2 years, this asset are depreciated for times 2. Are we together? At cost that. So what is the total value?
72.
72.
7.
So where should I use this figure? Where should I use that value? Tim. I need to deduct it from. I need to deduct it from the accumulated depreciation altogether. That figure needs to be deducted from the accumulated depreciation altogether. So we've been provided with accumulated depreciation of this asset. Equipment was that we need to less that because that we are doing away with that asset. For the depreciation for the year, this is what we use for the depreciation for the year. Are we together? However, when you'll be getting the net book value, we need to understand that we have already disposed. So this is loss on disposal. Loss on disposal. We need to subtract that on accumulated depreciation. Together, team. Are we together? Tuko sawa?
Yes. Yeah.
Asante.
Does that mean the 13,200 there?
Huh?
The one we had calculated initially, does it mean we forget it or?
Yes,
Why
this is
do we
wrong.
put it?
That's why I was saying this is wrong. Hiyo toa hapo. Sawa sawa, hiyo toa hapo. Sawa sawa. Tuko sawa.
Yes.
Are we together? So then additional information number 7, mentioned during the year ended 30th June, Clubhouse extended at a cost of 18 million. This was not recorded. So I get to the Clubhouse, nitaongeza value. So that is working, we call it working 3. We have the Clubhouse, we call it Clubhouse. So Clubhouse, kuna 153, that is the value at the end. But we omitted, there was addition, are we together? There was an extension, was extended, so we need to add it. So at the end, the value is how much? 18,000 plus 153. So the value of the Clubhouse ni ngapi? The value of the Clubhouse ni ngapi? Hiyo inafaa ikuwe walkover tafadhali.
171.
171,000.
So that is the value because we omitted extension. The extension that was added. That's the capital expenditure. So 171. I want to wrap this part. Na niendelee na working zingine hapa. Can I wrap this part?
Yes.
I want to wrap this. Our canteen sales master umeweka value tumefanya working yake. So I want us to do workings for canteen purchases out together. Canteen purchases altogether. Canteen purchases. So canteen purchases, working, the next that is working for. On canteen purchases. Can I open a TIFF format? I'm opening a TIFF format. Unaona hiyo TIFF format tafadhali? Tunaona hiyo TIFF format? Lazima nifanye hii hata question ya formats. Hatuwezi enda kama tujafanya hata hii question ya formats. Canteen purchases. So angalia the first information. On those information, we're being told that canteen, are we together? Payables. Unaona hapo payables, accrued expenses. So this is accrual. Remember, purchases comes from what? Payables altogether. Accrued payables. Tuko pamoja? Nataka watu waseme yes tafadhali. Hata yes moja, yes moja. Teacher Mercy, Teacher Joseph, Teacher Elizabeth,
Yes.
and Teacher Betty. Mseme hata yes. Well, anytime we talk about purchases basically comes from what? Purchases zinatoka kwa payables. That's why if you want to get purchases for the year, we open a payables account to debt creditors account together. Tuko hapo pamoja?
Yes.
Well, so then payables account, we're told that payables at the big canteen payables is 4. So payables are liabilities. So balance brought down is a credit. That is 40, 50. Those are liability. And we make payments, the payable. Canteen purchases, payments, purchases paid, purchases. How much was paid? That was 30, 150. Tuko pamoja? Unaona kwa income and expenses receipt. Joseph, unaona hiyo?
Yeah.
Shida ni.
Excuse me.
Betty.
It's
Betty,
Elizabeth.
niko na wewe kweli? Nyinyi ndio jeshi yangu. I cannot get any person. It is only you that I have. You see, when you have your children, it is only them that you have. I cannot
It is okay,
have
mwalimu.
children than you.
I
So
am
then
with you.
have balance carried down. So balance carried down, these are payables still at the end. So we think that we still owe suppliers ngapi? 5,400. So angalia this.
Is that a ledger or that account payable, accrued payable? Is that a ledger or
Yote unasema sisikii. Number one, say your name, then you'll be very clear. Who is that talking?
Elizabeth? I'm asking the T format there. Is it a ledger or what are we doing over there? I can't follow.
Is it this definitely number one, this is the T format. It's in the T format. So the essence of account is to find purchases for the year. Why am I opening a payables, accrued payables account? Is to get purchases for the year. Sawa Masi. The essence of that account is to assist me to get purchases for the year. So tunaambiwa mwaka kianza, the old suppliers 40-50. So balance brought down is a credit because suppliers is a liability. Then we're being told that during the year, suppliers were paid 30,150,000. But at the end, we still owe suppliers 5,000. So how much was purchases for the year? That is the essence of that payable accounts. Umenipata Elizabeth?
I think I'll just understand when we continue.
Nani ana swali tena? Ulikuwa, did you go through the video that we had on the other time? Have you gone through the video?
No.
The same concept was there. Have you gone through the video?
No, I haven't. I'll go through it.
Betty unanielewa? Joseph na Masi mnanielewa?
Yeah.
Betty, tulikuwa na wewe. Yes.
Yes, I'm okay. I'm just struggling. I'm trying to go to where the balance carried down to me.
Angalia hizo entry. The following balances were available as a 32. Angalia canteen payables. Canteen payables after outstanding electricity and water. Umeziona?
Ah, okay.
That is where we get them. But again, you don't even need to open this T format. So if I'm looking for purchases for the year, in the shortcut, and I gave you this formula, we say a balance carried down, commonly accrued expense, we say balance carried down at the end, accrued, balance carried down, that means at the end, plus expenses paid, minus accrued balance brought down. This is at the beginning. This is at the beginning. So I don't need even to open that T format. So payables accrued at the end ni ngapi? Ni 5,400 plus expenses. So this is 35 by 50. 35 by 50. 35 by 50. That is 35 by 50. So this is income statement. So that gives me purchases for the year. So what is the difference purchases for the year? Ni ngapi? That should be 31. Kama mmekataa, let mwalimu do it by himself. So that should be 31,500. Iko sawa? Is that okay? So that is the figure of purchases for the year, Purchases for the year. Tumeelewana?
Okay. Just confirming. 5400 plus 30.
Ask questions. Ask questions. Uko stuck wapi tafadhali? Why you
I'm
stuck?
not getting. Mi sipati same answer na wewe. I'm just verifying.
How can I help
okay.
those who are quiet and I'm talking? How can I help those who are quiet and I'm talking?
It's okay.
Naweza saidia wenye wamenyamaza na naongea haje? Masi, have I sorted you?
Yes.
Joseph, have I sorted you? Kila mtu aongee tafadhali. Kila mtu aongee.
Mwalimu yuko sawa? Yuko sawa.
Wewe ndio uko sawa, wengine wamenyamaza.
Sawa.
Asante. Elizabeth, uko sawa?
Yeah, I'm okay.
So I want to, it is with 30, you are a bit, is there somebody who's tired? Because the essence of it, we should not even go. If you're extremely tired, then I should leave you people to take a rest Then on Tuesday, because I don't know whether you have a class on Tuesday. You guys look very tired. Is there anybody who's very tired?
Being a Sunday, that is expected.
Yes, so I will stop at that point. I'm noticing, you see, these calculations need a lot of engagement. I'll be writing figures and I will be teaching myself. So I'll love you to take a rest. Take a rest, we'll pick it from there. But remember, Tuesday to commit, I'll just finish this thing, then I go to manufacturing. Nimewapatia notes, soma manufacturing because nitaenda tu swali. Once we finish this, I'll just go to question for the manufacturing. Sawa. I'll just
Okay.
for the manufacturing. Guys are extremely tired, and at that pattern, it is not going to be a very going to be helpful for you. If you don't, helpful for you. Yeah, so take a rest. When you come, believe me, the first question, Mercy, you participated so well. First question, Joseph, you participated so well. And that is what I need. On Tuesday, if you don't have any class, then I should be able to meet you. Are we together? So we close it there. God bless you and have a great evening. Asanteni sana.
God bless you, Mwalimu. Bye-bye.
Asante.